Florida's real estate gold rush drew in 330,000 new residents and sent home prices rocketing sky high, as Governor DeSantis promised a new era of prosperity. Home prices have plunged 11% since 2022. Over half of sellers are slashing their listings, and nearly 8% of homeowners owe more than their homes are worth. With equity vanishing overnight and political pressure mounting as foreclosures creep up, the governor of Florida has reached a public breaking point. What triggered the collapse of a city once hailed as unbeatable? And could this disaster spread even further? The real stakes of the Fort Myers crash are only beginning to surface. By the spring of 2025, Fort Myers stands as the starkest example of a Florida housing market in free fall. Median home values have plunged 11% from their pandemic peak, wiping out years of paper gains in less than 24 months. Inventory has exploded. Over 14,500 homes are now listed for sale across Cape Coral and Fort Myers, a number not seen since the aftermath of the last crash. More than half of those listings have already been reduced at least once, with some sellers slashing prices by tens of thousands just to attract a single offer. The pace of decline is accelerating. In February, prices dropped 6.5% month over month. March saw a 7.1% cut. By April, the drop hit 7.8%. National housing trackers now rank Fort Myers among the worst-performing markets in the country. For homeowners who bought at the height of the boom, the math is brutal. Nearly 8% now owe more than their homes are worth, the highest share in the nation. For a family that bought a $400,000 home with a minimal down payment, selling today would mean bringing cash to the closing table just to escape the debt. The surge in inventory tells its own story. In 2023, there were just over 5,500 homes on the market. By 2024, that number had doubled. Now it's nearly tripled, with rows of for sale signs stretching through neighborhoods that were once magnets for out-of-state buyers. Days on market, which once hovered around 2 weeks during the frenzy, have stretched past 3 months. The spread between asking and sale prices has widened, and appraisers struggle to find recent comparable sales that justify even the new, lower offers. Behind these numbers, the consequences are mounting. Foreclosure filings are on the rise. Small builders report project stalls and layoffs as unsold homes pile up. For every seller cutting their price, there's a buyer waiting for an even deeper discount, convinced the bottom hasn't arrived. In Fort Myers, the data is no longer abstract. It's a daily reckoning, playing out on every block. For buyers watching from the sidelines, the numbers in Fort Myers translate into real-life consequences. The median home price now hovers near $375,000, but that headline figure hides a deeper affordability crunch. Despite falling prices, higher mortgage rates and ballooning insurance premiums have pushed monthly payments far beyond what many local families can handle. For a typical home purchased at last year's prices, the monthly bill has climbed by hundreds of dollars, erasing any relief from recent discounts. First-time buyers, once drawn by the promise of Florida's sun and space, now face a stark reality. Carrying costs for a modest property can easily top $2,600 a month, a 44% increase from just 2 years ago. Even as more homes flood the market, the gap between what buyers can afford and what sellers need to break even grows wider each month. The dream of homeownership, so accessible during the pandemic boom, is slipping out of reach for many. Negative equity isn't just a statistic, it's a daily worry for nearly 8% of local homeowners. Those who bought with small down payments during the peak now find themselves trapped, unable to sell without taking a loss. For families who stretched to buy at $400,000, today's market means owing more than the house is worth, with no easy way out. Lenders are tightening standards, requiring higher credit scores and bigger down payments, leaving even fewer options for buyers hoping to enter the market. Investors, too, are feeling the squeeze. Many who snapped up properties in 2021 and 2022 now face shrinking rents and rising vacancies. with little hope of flipping for a profit. Some are offloading homes at a loss, while others hold on, hoping for stabilization that remains stubbornly out of sight. Each new price cut chips away at confidence, and every unsold listing is a reminder that risk in Fort Myers is no longer theoretical. It's personal, and it's growing. By the summer of 2020, Fort Myers was swept up in a migration wave few could have predicted. Mortgage rates dipped below 3% for the first time in decades, unlocking cheap credit for buyers from every corner of the country. Remote workers, newly untethered from city offices, scoured listings for homes with space for a backyard and a home office. Retirees, families, and young professionals arrived in droves, drawn by Florida's promise of sun, low taxes, and a fresh start. United Van Lines ranked Southwest Florida among the nation's top inbound destinations, and Lee County alone recorded more than 17,000 net new arrivals in 2021. Double the pre-pandemic average. Every data point painted the same picture, a region transformed by newcomers. The DMV processed over 11,000 out-of-state license swaps in a single year, while census estimates showed Lee County's population swelling by more than 23,000 between April 2020 and June 2022. Neighborhoods that once sat quiet saw moving trucks lining the streets and construction crews racing to pour new foundations. Builders couldn't keep up. Zoning caps and impact fees were relaxed, fueling a surge in permits and new subdivisions that stretched east and south of the river. For buyers, the competition was fierce. Homes listed on Friday often had multiple offers by Monday, many from out-of-state buyers making cash bids, sight unseen. Agents fielded calls from New York, Chicago, and Atlanta, with clients eager to escape high costs and harsh winters. Footage from a recent event in downtown Fort Myers shows the governor flanked by local officials, pledging to stand with every family facing foreclosure and fight for stability in our communities. Behind the scenes, state agencies scrambled to deploy relief funds and expedite claims, but the scale of the problem threatens to outpace every intervention. Economists caution that the next 12 to 18 months will be critical, not just for Fort Myers, but for the broader Sun Belt. With investor appetite fading and affordability stretched thin, the risk of further contagion remains high. For now, the epicenter sits on Florida's Gulf Coast, but the tremors are being felt far beyond. The reckoning in Fort Myers is no longer a local crisis. It's a warning shot for every market that chased the boom without a safety net. In April 2025, home prices in Fort Myers have fallen 7.8% year over year, capping an 11% drop since the pandemic's peak. Over half of all listings have seen price cuts, and nearly 8% of local homeowners now owe more than their property is worth. These numbers mark the sharpest reversal in the region's modern history. The documentary traced the surge of migration and cheap credit, the role of policy decisions, and the mounting strain from insurance and oversupply. Yet, despite extensive public records and interviews, key details about internal state deliberations and the true scale of future foreclosures remain undisclosed. The crisis in Fort Myers now stands as a documented case of how rapidly market conditions can turn, affecting thousands of families and prompting urgent government action. The full impact for homeowners, buyers, and Florida's leaders continues to unfold. As of today, the evidence leaves one fact clear: the Fort Myers housing collapse is no longer a warning, but a reality with consequences still emerging.